Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So now let's take a look at the gold market. As on the euro currency, here we have actually the same performance. So intraday targets around 19 even also has been completed. It's very accurately, and we got really sharp bounce up at the end of the previous session. Meantime, it doesn't change the overall background. So we have the bearish context on the daily chart. We have no bullish directional patterns. Trend stands bearish, so it means that on intraday charts we need to search chance to go short. This is of course only for those who would like to trade on intraday charts and not worry about Fed meeting results and so on. So if you're not sure, it's probably better to sit on the hands and see what will happen and return back to the trading once when the major data will be released. So on the 4-hour time frame chart, that's our OP with this ABCD pattern. Here's actually, guys, take a look. It might be some slope neckline. Theoretically, it is possible that actually currently we are getting the head and shoulders. So this is left shoulder and head. This might be right shoulder because as you can see, top stands approximately at the same points of the left arm. And theoretically, we could get head is forming and it's probably downward continuation. Yes, it is not very pleasant to take the position against this pattern. So this looks really great. So you can see this reversal bar to the upside, good looking bullish engulfing pattern. As we know, usually it suggests extended retracement, compounded retracement in the shape of the ABCD pattern, and that's the major risk currently for this trade. But at the same time, on a 1-hour time frame, you could well take the position with this relatively small risk, and if this action will happen, we will see next what to do. I'm speaking about this hourly picture. You can see that with upward reaction, market hits the 618 level, 1930. Hourly trend has turned bearish right around this area, and you can see here's a minor reversal candle is forming. So theoretically, you could try to take the position with the stops above this area, which really will be very near a standing stop. Just minor risk will be for this trading, and see what will happen. Once market will start dropping lower, you could move stop to the break-even. If second leg of this ABCD action based on engulfing will start, well, in this case, your risk will be small, or maybe you will be able to out at the break-even, or even with a small profit, depending on where downward action will be stopped. But supposedly, here as you can see, based on this shape, you can see also some kind of the head and shoulders, something of that sort. So it seems that market should drop somewhere to 1920, 1917 area maybe, where the potentially another leg could start. If no leg will start, it's just market will keep going lower. That's great. You're just getting the good position with the downward continuation here and on the daily chart. In this case, we just will be watching for the Fed meeting, reaching of the XOP on the 4 time frame chart around 1880 area, and so on. So that's the only way how you could act currently. Of course, you could maybe just do nothing and wait when this engulfing pattern will work out. For instance, taking no position, just sit on the hands. Market is forming, it's getting higher. This is also a probable solution. But in this case, you could miss the scenario if market will just keep going lower, based on the data will be released, based on the Fed meeting and so on. So lots of options exist. Choose what you like more in the current circumstances, and let's see what will happen on comments from the Jerome Powell.